Welcome back, everyone. We've got something pretty fascinating to dig into this time, the Capital Markets Act of Kenya. So, basically, we're going to try to break it all down for you and see what it means, like for investors and, the whole financial scene in Kenya.
Yeah, it's kind of like you know how people say a country's financial market is only as good as its rules, right? Well, in Kenya, this is like the bedrock. It's what makes their securities industry stable and, trustworthy.
It's a pretty dense document, though. Where do we even begin with something like this?
Well, I think the logical place to start would be with the Capital Markets Authority.
The CMA.
Exactly. They're not just there to make the rules. They're like the watchdog, making sure, everybody's playing fair and following the rules. They're the ones who give out licenses to operate in the market, like if you want to be a stockbroker or an investment bank or anything like that.
Oh, so you can't just, set up shop and start trading.
Right, exactly. It's not that simple. There's this thing called the fit and proper person test. And it's meant to make sure that anyone who's operating in the market isn't going to be a risk. Like they look at your financial history, your reputation, all that.
So like a background check.
Yeah, kind of like that. I remember reading about this case where this person was denied a license because it turned out they had a fraud conviction from years ago.
Wow, that's serious.
It is. The CMA takes its job very seriously. They're like the guardians of investor trust,
No, it's not enough to just know how the markets work. You also have to be, ethical.
Exactly. And that whole idea of ethics, it ties into how the Act defines interests in securities, which is, it can get a little tricky.
Okay, I'm all ears. What's so tricky about it is just owning shares, right?
It's not always that straightforward. The Act recognizes that you can have influence and benefit financially from securities, even if you don't like directly own them. For example, let's say you've got securities held in a trust, right? You're not directly controlling them, but you're still, you're benefiting financially. So the Act says that means you have an interest in those securities.
So it's about acknowledging all the different ways people can be connected to securities and making sure there are no conflicts of interest.
Right. It's about transparency, making sure everyone knows who stands to gain or lose, from decisions that are made.
That makes sense. Speaking of transparency, the Act gets pretty specific about licensing for different types of market participants. What's the reason for all those detailed requirements?
Well, it all comes down to protecting investors. The CMA sets these standards and makes licenses mandatory so that only competent, financially sound entities are allowed to operate.
So it's kind of like a seal of approval. Like when you see a licensed entity, you can feel more confident that they're legit.
Exactly. And the CMA has the power to investigate and even impose penalties if a licensed entity doesn't meet those standards. So it's all about accountability.
So there are consequences if someone tries to get away with something shady.
Oh, yeah, absolutely. The Act gives the CMA a whole bunch of tools to investigate, suspicious activities and impose sanctions. Like they can issue fines, revoke licenses, the whole 9 yards.
Sounds like they're not messing around.
They're not. And that all becomes even more important when you start talking about public offerings, which is when a company wants to sell shares to the public.
Right, like an IPO.
Yeah, exactly. And it's a big deal for the company, obviously, but it's also a big potential opportunity for investors. But the question is, how do you make sure that everything is fair and transparent? Well, that's where the prospectus comes in. It's basically the document that the company has to give to potential investors. And it has to lay everything out, their business model, their financials, the risks, everything. The Act is very, very clear about what needs to be in that prospectus.
No hiding anything, right?
Exactly. Full transparency is key. And the Act even goes further than that. It actually talks about different types of public offerings.
Oh, like what?
Well, you've got your unrestricted offers, which are, open to pretty much anyone. Then there are restricted offers, which might be targeted at specific groups of investors, like high net worth individuals or, people with specialized knowledge. And then you've got limited restrictive offers, which are usually just for a small pre-selected group of investors.
So it's all about different levels of access depending on the type of offer.
Right, but even with all these different types, the CMA still has the final say. They can grant exemptions from certain requirements if they need to.
So they can bend the rules a bit if the situation calls for it.
Yeah, it's all about finding the right balance and making it possible for companies to raise capital, but also protecting investors at the same time.
It sounds like the Act is trying to cover all the bases.
It really is, and that commitment to a level playing field, it's even more important when we start talking about market abuse. That's when things can get a little bit messy.
Ooh, market abuse. That sounds interesting. What exactly does the Act consider market abuse?
It's basically any activity that's done to manipulate the market, for personal gain. A classic example is insider trading.
Right, like when somebody uses confidential information to make a profit.
Exactly. Or like front running, that's when someone knows about a big order that's about to hit the market and they trade ahead of it to, profit from the price change.
So it's like they're cutting in line and taking advantage of the situation.
Exactly. And the act takes this stuff very seriously. There are big fines, even jail time in some cases.
So it's not just a slap on the wrist if you get caught.
Oh, no, not at all. It's a clear message. Don't try to cheat the system.
I'm glad to hear it.
Yeah, it's all about maintaining market integrity, not just making rules, but, making sure people follow them.
Well, this has been incredibly helpful. I feel like I'm already starting to get a better grasp of how the Kenyan capital market works.
That's great, but we've really just scratched the surface here. There's so much more to explore. Like, for example, the Capital Markets Tribunal. It's a whole other layer of, oversight and checks and balances.
A tribunal. That sounds kind of intense.
It is, and it's a really important part of the whole system, but we'll have to save that for next time. Yeah, you're right. There's always like another layer when you're talking about regulating something as complex as the capital markets, and the Capital Markets Tribunal is a perfect example of that.
Okay, so what is this capital markets tribunal exactly, and why is it like so important in the whole scheme of this act?
Well, think of it like a specialized court. It's specifically designed to handle appeals and disputes that are related to, well, capital markets. So let's say, a licensed entity like a stockbroker, they feel like they've been unfairly analyzed by the CMA, right? They can actually appeal that decision to the tribunal and get, an independent review.
So it's kind of like a check on the CNA's power, make sure they're not, overstepping or anything.
Exactly. Yeah, it's all about making sure everything's fair and there's due process within the whole regulatory system. And here's the really interesting thing about the tribunal. It's not just made up of lawyers.
Oh, really?
Nope, it's got experts in finance and accounting too. People who really understand, the ins and outs of capital markets.
That makes sense. You want people who can actually, like, understand the case, not just the legal arguments, right? It's like having a doctor judge a medical malpractice case instead of, just a lawyer.
That's a great analogy, and that kind of brings us to another really important part of the act, which is its focus on defining what exactly constitutes prohibited conduct and outlining specific penalties for those actions.
Right, we're talking about, the CMA's power to investigate and impose sanctions. But, like, what exactly are these prohibited activities that we're talking about here?
Well, we're talking about actions that could undermine market integrity or, farm investors in some way. So things like unauthorized trading, spreading false or misleading financial information, or even, just failing to meet the licensing requirements that we talked about before.
So it's basically like laying down the law and making it crystal clear what you absolutely cannot do, right?
Yeah, exactly. And the CMA, they have quite a bit of power to enforce these prohibitions. Like they can demand, to see records, investigate suspicious activities, and even intervene in the management of a licensed entity if they think there's a serious problem.
Wow, they really have a lot of tools at their disposal, huh?
Yeah, they do. And those terms, they come with real consequences. Like the act outlines, a whole range of offenses and the penalties that go along with them. We're talking, some pretty hefty fines, millions of shillings, and even jail time in some cases.
So it's not just a slap on the wrist.
No, not at all. It makes it very clear that, engaging in fraudulent activities, insider trading, market manipulation, it's going to cost you.
And that applies to individuals and companies, right?
That's right. The act recognizes that both can be held accountable for wrongdoing, and sometimes, both might even face penalties for the same violation.
So nobody's above the law.
Exactly. It doesn't matter how big or powerful you are. The act, it levels the playing field and holds everyone to the same standard of conduct, and it goes even beyond punishment too. Like the act also allows for the recovery of ill-gotten gains.
Oh, interesting. So it's not just about punishing the wrongdoer. It's about actually, like, making things right and restoring what was lost?
Yeah, absolutely. It's about creating a market where honesty and integrity are rewarded, and the people who try to cheat the system, they not only face consequences, but they also have to give back, whatever they unfairly gained.
I like that. It sounds like the Act takes a really comprehensive approach, not just defining the rules, but setting up these mechanisms to enforce them and actually right the wrongs.
It does, and it really shows you how important it is to have, a really solid legal framework in place to guide a system as complex and dynamic as a capital market.
Absolutely. But you mentioned earlier that we're just scratching the surface here, right? What other like surprises are hidden in this act?
Well, remember how we were talking about the CMA's responsibility to make sure the markets are fair and transparent? Well, the Act actually gives them the power to directly intervene in the operations of securities exchanges in certain circumstances.
Wait, so the CMA could just step in and tell the exchanges how to do their job,
Well, there are certain situations where they might need to do that. Like, for instance, if there's a major market disturbance.
like a crash or something.
Yeah, exactly. Or a sudden surge in prices that just doesn't seem to make sense, like it's not connected to anything happening in the real world.
So if things start to get a little crazy, the CMA can just like step in and take control.
In a way, yeah. They can suspend trading, set limits on how big a position someone can hold, even change the rules of the exchange to try to, stabilize things and protect investors.
Wow, that's a pretty big responsibility.
It is, but it's a crucial role, making sure the market stays stable and functions the way it's supposed to. And the Act, it gives them the tools and the authority they need to do that.
This whole deep dive has been really eye-opening. I mean, we've covered so much from the basic principles of the act to, the details of how it's enforced and how the CMA can even intervene in the market.
Yeah, we have, and we've only just begun to really explore all the intricacies of the Kenyan Capital Markets Act. There's a whole other dimension we haven't even touched on yet, like how the act regulates specific types of securities. Remember those asset-backed securities you were asking about before?
Yeah, the bundles of loans and stuff. Sounds like that could be a whole other deep dive in itself.
It definitely could be, and we'll dive into that and a few other interesting parts of the act in the final part of our journey.
All right, so we've talked about, the CMA and how much power they have and the tribunal, that whole appeals process, and all the rules, the do's and don'ts. But you keep mentioning these asset-backed securities, and I gotta say, I'm pretty curious about them. What are they exactly, and why does the act like give them their own whole section?
Well, you know how we talked about diversification? These are a way to do that. It's like imagine a whole bunch of assets, like mortgages, car loans, things like that, all bundled together, and then asset-backed securities. They represent a piece of the cash flow that bundle generates.
So instead of investing in like one company's stock, I could invest in like a slice of a bunch of different loans.
Exactly, and that's part of the appeal. It's less risky because you're spreading your investment out over all these different assets. Plus, they often have higher interest rates than traditional bonds.
Sounds kind of complicated, though. Is that why the act, has all these rules about them?
Yeah, definitely. It's a way to make sure everything is transparent and investors are protected. The Act sets requirements for disclosures, credit ratings, risk management, that sort of thing.
So even though it's like a bunch of different assets, the act still makes sure investors know what they're getting into.
Exactly. Remember, the whole point of this act is to create a fair and transparent market. It doesn't matter what kind of security we're talking about.
It's pretty impressive. The act covers all these different things from like regular stocks and bonds to these more complicated securities.
Well, they did a good job of creating a framework that could, adapt to new things. They couldn't predict everything, obviously, but they made a system that could handle new stuff without losing sight of the core principles.
Makes you wonder what they would have thought about, like cryptocurrencies.
Ha! Yeah, that's a whole other can of worms, isn't it? Maybe we'll do a deep dive on that someday.
Definitely. Well, I think we've covered a lot of ground here. The players, the rules, how it's all enforced, even some of the more complex parts of the market.
It's been great talking through all of this with you.
Likewise, and to everyone listening, hopefully you've learned something about the Kenyan capital market and, feel a bit more prepared to navigate it yourselves.
Knowledge is power, right?
Absolutely. Well, that brings us to the end of our deep dive on the Capital Markets Act of Kenya. Thanks for joining us, and until next time, stay curious. CT2.